Hello everyone and welcome once again to the Weekend Review and a look ahead. I am Will Hassel, and starting off as we always do with the ETF of the Dow. I do believe we closed at record highs as we see on the chart. We did close up on the highs. Some pretty interesting stuff happened this week. We had various payroll reports. We have gotten back all the jobs that we've lost since the Great Recession. On Thursday, we had jobless claims, which were kind of meh. And we also had of course, Super Mario going and saying that he will start kind of a form of QE. He didn't really use the bazooka. He kind of just took out a machine gun and shot bullets everywhere. He said that he's also not done yet. He's going to be buying various different ABSs, LTROs. Also went and introduced negative deposit rates for the European banks, meaning that if they keep money at the Federal Reserve, they will have to pay the central bank of the ECB, the European Central Bank. So that's kind of really what happened. It was really, really quiet, as it has been. No volume, some volume. It all depends, but just kind of grinding higher. And we'll get into stuff like the VIX here later on. I'm not an options trader, but I do always look at the spot VIX. One of the Leaders Investment Club traders, Alex, who is big on Tasty Trade and stuff like that, always tells me never to look at the spot VIX, always look at the VIX futures and all that stuff. But I still look at the spot VIX because I just don't want to have to look at the futures. As we see here on the Dow, clearly went and is above all of its simple moving averages. Just really grinded higher. Had a little bit of choppiness on Tuesday, but other than that, really just grind. That's kind of been the theme these past couple of weeks. Is we grind higher on days where there's no news. It's less violent upwards. I wouldn't say violent because we still have a very low VIX, but as we see here on the SPDR, really pretty much the exact same thing. Big pop on Thursday after the ECB, and a big pop on Friday after the jobless claims numbers. And here's the QQQ for the Nasdaq. Nasdaq has been going really, really well lately, and so has the Russell, even though it has been not performing very well for a long time. But here's the chart of the Russell. I'm not a huge fan of the Russell still, but it's been a beaten up asset and people are starting to go to it. And here is the chart of the VIX. As you can see, it is now it closed under 11 for the first time since like 07. Now people get scared when they hear, a lot of no volatility. It's bad for traders. It's good for investors. What it really means is there's just not a whole lot of whiplash going on in the markets. And remember, we've never really, just non-volatile markets. It never really causes a bear market exactly. It's just kind of complacent. In terms of economic data this week, not a whole lot of stuff to look out for. Mainly last week was the big heavy econ week. But on Monday, St. Louis Fed President James Bullard gives remarks at Tennessee Bankers Association annual meeting. Comments may come out of there. It all depends. You may just want to keep an eye out for that. Normally when comments are, talked about in the market, they move the market a little bit. Then again, on Wednesday, David Tepper supposedly moved the entire market. I don't really buy into that too much. Tuesday, we have small business optimism is posted. Sorry, you can't really talk. Tuesday at we have April wholesale inventories, we're looking for a rise of spot 5% versus the last period of 1% On Wednesday, U.S. Treasury Secretary Jack Lew gives remarks at breakfast at Economic Club in New York. Comments most likely will be brought out from that. You will probably want to go and look at that. It's going to be that's going to be one of the ones to really watch to see if comments come out, because it is the Treasury Secretary. On Thursday is going to be a really heavy econ day for the week. We have May retail sales. We're looking for a consensus of spot 4% versus last period of spot 1%. May import prices. We are looking for a rise of spot 2% versus last period of negative spot 4%. April business inventories. We are looking for a rise of spot 4%, which was the same as last period. And on Friday, we have, on Thursday night, our time, Friday, Japan time, we have the Bank of Japan is expected to leave monetary policy unchanged. Nomura says the focus will be on BOJ Chief Kodura's new conference. They expect it to be unchanged, but you never know. Over there with Abenomics, something could happen, and it could very well move the markets over here in U.S. in the morning. So just kind of keep an eye out for that on Thursday night for the Bank of Japan monetary policy. And finally, on Friday, we have May PPI, which I'll be looking at, where it's expected to rise spot 1% versus the last period of spot 6%. And then we have the June Michigan sentiment predictions. We are looking for 82 spot 5 versus last period of 81 spot 9. Okay, going into my portfolio a bit, I'm going to go hedge. Starting off with this, kind of like the VIX, just really kind of going down lower. You see sometimes that'll pop up higher during the first couple parts of the day if the market's a little negative, and then it slowly fades as the market goes positive. It's dragging my profits down a bit, but I still want to be hedged just in case, because I have no idea what may happen later on this year. JP Morgan, banks have been doing pretty well. They've been really starting to grind higher along with the rest of the market. I've also noticed that a lot of kind of quote unquote like value plays like JP Morgan with a low PE and AIG have also been picking up a lot of steam. So here, JP Morgan really on Thursday and into Friday, along with the broader markets, it started to really perform. Visa has just kind of been recently. Not a whole lot really going on. They had some charge swipe lawsuits, although I've come to know that Visa has a pretty good law team. But look at the 3-month chart. Nice little trend coming off of April and following up. It's still staying in that kind of trend line area. Hopefully it can go above 215 and we can start going higher to 220. But I have to say I did go on a little bit of a rant earlier this week, because I was sitting here on my desk watching the market open, as I like to do, even though it's pretty boring because there's nothing going on. And I was just astounded that here I am watching Visa open up, and it's trading at the bid ask is a 20-cent spread. A 20-cent spread on the open of the market on a Dow stock. I mean, that's getting kind of crazy. For some people that don't watch the market every single day, normally Normally you have a 1 cent spread between the bid and the ask. At the most, maybe a 4. As momentum starts coming up, you may see, the bid and the ask start shooting up one way or the other depending on how it's moving, but you rarely have huge spreads like this. I remember back when I used to trade penny stocks and OTC stocks, you'd get on annual spread of that, or if you're trading it in pre-market, you may have a 20-cent spread, not at the open of the market. So that's when I just finally went, this no volume thing is really just getting crazy, that even the algorithms aren't putting out a whole bunch of volume. A whole bunch of trading. And that's kind of when I got a little, frustrated, because I'm like, oh, come on. Really? The algorithms can't even do this? Okay, Michael Kors. Really, ever since earnings, has just been kind of just stable, I'd have to say. It's been trading in a range, a pretty tight range, as seen here when we go out to the 20-day chart. This was the earnings, the whole earnings whiplash thing that kind of happened, and now it's just kind of trading in a range, forming kind of a base. The lowest it's gone is, down here at 93.31, and we almost touched into the low 92s, but it's been kind of hovering around 94 for quite a while now. And if we actually bring out the chart a little bit, 6 months, keep watching that kind of 94 level, and you'll see 95 was resistance for quite some time on the longer term chart, and they kind of broke out there. But 95 being a level to watch. If it breaks that for Michael Kors, I still think you get in. Earnings were still pretty good. Margins have kept rising, even though they have slowed down just a tiny bit. I still love Michael Kors, still love the earnings. I'd still tell people to get into it. Well, let me tell you this. I work down at my local Morgan Stanley branch every once in a while, and when they ask me if there's any stocks that they should recommend to their clients, I always recommend Michael Kors. XLU utilities, gonna be really watching this if PPI is bigger than expected in CPI in the later weeks, but just gonna bring down not that. It'll bring down this, and you see the 52-week price is 43.52, and you're going, okay, utilities are coming up to almost another all-time high this year, and that this whole dip was pretty much a great buying opportunity. Utilities at their height were up 14%, and I just gotta love, that utilities are, doing this in this kind of, it's this low rate environment that's causing, stuff like utilities to perform really, really well, and you still get paid a big dividend, which is why I love them. So I do still like the XLU, and I continue to hold it. I'll go to Starbucks just because it was the least mover of all the ones that are left. It has been trying to get finally broke above 75. It's been grinding higher as well. It's kind of been the stocks that got really hit on in April and the spring when we had that big downtrend, have just been kind of slowly rocking it higher with the rest of the market. As you can see here, ever since that decline, below 72, up above 72, continues higher, and is just kind of starting to just rock out. I think by the time summer ends, we could probably see it go to 80. I don't think 80 is too big of a, especially if they report earnings, that they can go and that it could continue higher. Which calling it, okay, it could go to 80, that's a 6.6% move to the upside. I think it can definitely do that. One of the things that they are doing right now is their frap truck. That's been going around California. It stops for a couple days. You can only pay by Starbucks card. that only make frappuccinos, and I gotta say, it's been getting a whole lot of buzz on Twitter, whole lot of buzz on StockTwits, and I just love the idea. Food trucks are very low cost, very low maintenance, and it just gives Starbucks that extra kind of cool factor that a lot of people are going to be going to, and people are actually going to the frap trucks. I think maybe they could do even more next year. They could do mobile coffee, mobile Starbucks, instead of necessarily opening them. They can just have, Starbucks food truck going around and stuff like that. I can see that in the future. And that's the kind of innovation that I like about Starbucks, still pushing that awesome mobile payment platform. And that's why I think Starbucks is going to 80. And I still think Starbucks is a great buy. They finally, Teavana and Starbucks are now starting to become one. That you start seeing the commercials of the Teavana shaken iced teas, the Oprah chai. The combination has finally changed, so they're also getting profits on both those fronts, and they're starting to still open up those Teavana stores, their standalone stores. It just makes me very excited for what Starbucks has in the future. AIG. I got in this one at $50.09, so I have just about a 10% return on it right now, but I got back in it way long ago. It's been just moving out recently off the back of multiple price targets, and then just kind of the shift in momentum really just, helped it get out of that. Here's that earnings, bump up, decline, shot up after a price target, and has just been knocking out highs like there's no tomorrow. And I just gotta love it. One of my friends and fellow investors in the Leaders Investment Club, John Dukas, went and actually got in, I think it was on Thursday, it was on one of the reversal day. Yeah, it was right here. He got in and it just shot up, and I'm like, John, that's absolutely fantastic timing. This is one of those, beaten up assets that I talked about, where it's got a low PE, great price to tangible book. It's not fully up to where it could be, and people just love that and continue to buy into this name. I can see it going to 60. I'm gonna look up on Finziv real quick on my desktop computer what the average kind of price target is, just to go and give you an idea, because because I'm also going to talk about that when I go into Under Armour about those average price targets. AIG is actually seeing a lot, and also they added another $2 billion worth of shares to their buybacks. Okay, so I'm looking here, and I see Deutsche Bank has it at 56. Barclays has it at 56. Deutsche has it at 58 at a different time. Barclays 60. Oh, yep. These are all the 2000. Here, I'll just get it all the 2014s. Barclays overweight at 60. Barclays overweight at 56. Deutsche Bank at hold, price target 58. And then Barclays overweight, reiterated on June 6th to 64. So it's just been kind of rocking high off of all these price targets. I mean, they see it going into the very high 50s, low 60s. You've got to love that. So NAIG is just, I just love it. I just love it. And then talk about the biggest gainer in my portfolio. My God, Under Armour soared. I think it was 7% this week. I mean, it was impressive. And this was a stock that just kind of rocketed higher after price target, after all these price targets were kind of, all these upgrades happened. Yeah, a lot of price targets were changed to, low 60s by Deutsche, by Barclays, and that just kind of kept moving it really higher. It has closed this April gap, and has just continued to rocket higher. It looks like the next kind of resistance area would be 60. A lot of people have moved their on StockTwits have moved their estimates of it going from 60 to 70. This coming off the back of a pretty good earnings report. I think people are getting more and more excited about the excited about their about the business. They see it doing growth. It's 10% off its 52-week high, so you get that going. Never mind. I'm sorry. It was up 10% for the week. It does have a 72 PE, which is kind of just price to earnings peg of 3.05, which is a little high. But I have to say the growth of this is one of those growth stocks that you almost have to have, just because it's almost too good to pass up, and you don't want to pass it up. Back when it was a lot of people waiting for it to go to the 40s, you just don't want to pass up this company. I think that kind of take out Under Armour, and this kind of brings me to normally I go and look at some stocks that moved quite a bit or have caught my eye. Keurig Green Mountain. The reason why I bring this up is there was some monster, as you can see from that holy candlestick, some monster volume on Friday's close. Here, I'll even display the volume for you. Like, we're talking about monster volume here, and it started all about 2 o'clock on Friday. So a lot of calls were bought. I think some puts were sold, and volume just skyrocketed. This thing moved a lot. My guess is there's some type of a rumor out about SodaStream. There were talks about Coca-Cola buying the entire company. I don't really know. Someone was making large bets. Something is going to be happening in Keurig Green Mountain. I can't say for now, but just keep an eye on that. And here's something that I want to take a look at: Morgan Stanley. Full disclosure, like I said earlier, I do work at Morgan Stanley sometimes. My local Morgan Stanley Wealth Advisors. This stock has been kind of choppy in this trade. Hasn't really performed much like a lot of the other stocks. I'll compare it to JP Morgan. Then again, it looks like it's up just about 2% higher than JP Morgan. I will go and compare it to another bank like GS. It's actually probably one of the better banks that have been going in terms of performance. Yeah, I'll do it against AIG. And then probably the XLF after that. AIG doing much better. But the reason why I bring up Morgan Stanley is I've liked this bank for a while. If you guys have followed me through this, you know I like this bank. For reasons that actually got further explained here's it against the XLF. That were further explained in the Barron's of this weekend. It was how Morgan Stanley has really turned around its business from prop trading and brokerage to really wealth management, that about half the revenue comes in from wealth management, which is the future of the financial industry. Wealth management will always be around. Prop trading won't always be around due to regulation and stuff like that. And I think it's a really smart move by Morgan Stanley. It's going to cause their to have steady revenue. They won't have volatile earnings. This light trading that's been going on won't affect them too much in their next quarter earnings. And I really do think that it's a great stock to have. I highly recommend it. It's one of the two stocks that I have like really big recommendations on that I don't own. That would be Morgan Stanley and Disney. Has a pretty good balance sheet, and has been one of those kind of distressed assets that we talked about. That hasn't really been performing much like that of its counterparts. When you start looking at the multi-years ever since the financial crisis, but I think because they've shifted their platform to more wealth management and trading and stuff like that, that they will you'll continue to see revenue and earnings growth in Morgan Stanley. And I think I'm going to wrap it up with that, guys. Thank you so much for watching. Please follow me on Twitter. I'm at WillHasselWS. If you have any questions, please do email me. Please follow all the members of the Leaders Investment Club. You can go and check us out at our website, leadersinvestmentclub.com. You can see my blog. You can see this video there. You can see it on my blog. You can see a whole bunch of other. Great articles on there by all the other content contributors to Leaders. And hopefully, I see you guys next time.